What is going on, you guys? My name is Mike. This is Wall Street Traders, where we break down hot trending stocks to put you at an advantage on the market. Right, next up on the list of stocks that I have to break down this morning is Sndl, or ticker symbol SNDL. Like always, guys, we're starting from a higher time frame, that being the daily interval. This allows us to find our support and resistance lines, our trend, our entries, our exits, our targets, all that good stuff, you guys. That's why we always start from a higher time frame and then break down to a smaller interval. Okay, let's go ahead and dive in. So yesterday we closed almost 5% down. Now we're at pre-market 88.50. And down another 2% for the morning. So overall, almost 7% within the 48 hours, or less than that. But let's go ahead to where we're at right now. I always mention how I found these support and resistance lines, just in case that somebody else is new, they don't know what they're exactly looking at. But up here is our major resistance line. It can be tested. We came up, got rejected here, tried again one more time, ultimately got rejected all the way down to our major support line, which is over here, and this can be tested as well back here, which once works as a floor, will work as a resistance, or vice versa. We can see over here that we got rejected twice, pulled back, ultimately broke above this, came up, came back down on our support, and then followed that trend over here, and then back over here is where where we're at right now and where we ended up. We can see that when we came down to the support line, we kind of pulled up, bounced off this level, and now pulled back down and kind of consolidated right here. And so what it's looking like it's going to do is a double bottom retest. If more than likely we'll pull back down to this 83-cent area and then retest that level. If it bounces, then we can say that we're going to start this upward trend. If not, then obviously it shows that we're going to be continuing this downtrend. So as of right now, we are above the trend line, and on our RSI, it does show that we're a little bit oversold and starting to correct. Let me check the volume real quick. Volume is at 881, not bad. Like to usually see it over 1 million in the pre-market. However, getting in right now wouldn't be the ideal entry, just because how much we've moved up in the past couple of days, and we still need to retest this floor. And then we have all this prior resistance over here, you guys. So if we can pull back down to the 83-cent area, that'd be an ideal entry. And to have your stop loss underneath this candlestick, that being at the 76-cent area. You can have it under this one. That is the 80-cent area. So you're only your stop loss is only 3 pennies down, which is ideal. You always want to risk the minimum amount, you guys. So let me check the 1 hour, how it's looking on the 1 hour chart. Yeah, you can see we have a triple top right here, you guys, and it's basically getting rejected and starting this downward trend. That's why usually sometimes people get confused on if I'm just only showing on the daily time frame. They're like, well, it looks like it's going up. Well, a lot of times you have to break down to a smaller time frame. That's why I was saying I'm on the daily, but now just moved on to the 1 hour, so I can clearly show you guys that we have resistance in this area. We have this top over here, and on the opposite side of this we have this support over here. So there is a minor resistance. I can't put a line here so you guys can see it, but I'm not going to go ahead and confuse you guys with doing that. But yeah, we are obviously starting this downward trend. The ideal entry, the safest entry, would be at the 83-cent area, you guys. Like I said, have your stop loss either below the 80-cent area, or you can have it under the 75-cent area. That's kind of a low, that's kind of a huge difference, but I like to give myself some room just in case there's a wick that peekaboos like this one did before it goes higher. Alternatively, if we can come back up to the 94-cent area and retest that level, and if we can break above that and come back down and retest it, that could also be another entry. But if we do end up heading in that direction, I'll make another video. But more than likely, we'll pull back down to this 83-cent level. That's why I didn't trade this yesterday, or I'm not trading it today, because I know that more than likely we'll pull back. And that's the ideal entry that I want to get in on Monday. So I did start a series, you guys, where I'm taking $2,000 and turning it into $10,000, only trading penny stocks. So if you guys want to check that out, the first episode was posted yesterday. But other than that, you guys, I like to break these charts down fast and efficiently. If you found it useful or helpful, please hit that like and subscribe button, you guys. It allows me to create this content every single morning for you. Other than that, I hope you guys have a beautiful day and happy trading.